Okay, all set. How's everyone doing? Good day to you as well, Sri. What's going around? Let's see, who all do we have? Got AJ, Melvin. Okay, I see some new names. That's that's always good. Um, so what we're gonna talk about today, at least I do want to go through the Reddit IPO. I know we wanted to do it last week. We didn't have time. We had so many other things that we talked about last week. And I gosh, what instead of 2 hours, we spent 2 hours, almost 45 minutes. So yeah, I don't want to, take you through 2 hours, 45 minute long torture. So so I thought today I'll start with Reddit IPO, just be done with it before we move on to other topics. Other thing I want to go through is I think it's been some 3 or 4 sessions earlier, someone had asked around a high yield investment opportunities. So I did, pull up some data around that. So I want to go through what are the different investments possibilities in high rate environment, which we currently are, right? Fed Treasury is still around 4% plus, right? 10-year. So what are some of the opportunities that exist in this high rate world, right? I guess I have an earnings, probably CrowdStrike, and yeah, some interesting charts as usual. All other things. So, what else do you have in mind? How was the week? Make sure my audio, everything is all set up properly if anyone is talking. Anything,
I
yeah, go ahead.
I just wanted you to know that everything is fine now.
Oh, okay. Yeah, I'm also able to hear. So I remember, I think last week my volume was like turned down very low, and I'm like, I can't hear anything. I can't hear anything until I realized the problem was at my end. Uh, so what else? What else is happening in markets? Market was volatile, I think on Friday. And interestingly, I probably wasn't. I mean, I generally don't sit around a whole day in front of markets, in front of my screen. I focus on, doing whatever I need to do in first couple of hours in the morning, and then focus on reading, and then of course, lunch and all that stuff. But on Friday, we had to go out at around 10 o'clock. We had an appointment at 10 o'clock. So I looked at in the morning and I realized, oh the gosh, the markets were up and had lost a lot of deltas. So I was like negative 300 deltas in one of my trading account. So I guess maybe I should neutralize it a little bit. So I added some positive deltas. Sorry, I added some positive deltas, brought it down to negative 250. Then I went. And then I only came back, after I think just 12, 12:40 Pacific time, like 20 minutes before market close. And I came as I'm like, the market has changed completely. And I ended up with like positive 300 deltas. I'm like, what the heck happened while I was away? But then I realized, looks like Nvidia dropped, what, 10% on, I think eventually it didn't close at a drop of 10%, but maybe it was like a intra-day movement on Nvidia of 10%. That would have caused it. I don't know. Whatever. But
Vivek,
what a swing.
because you added some delta. That's the reason the market went down.
But at the end
You
of
do,
the end of a
you,
day, I think eventually still good, right?
do you
So
have Zoom link? Do you have a Zoom link? One of my friend wants to join.
so it's hold on, let me just pull it up from copy invite. So okay, I'll just put it in the, I just put it in the chat.
Thank you.
All right. Yeah. So, but good thing is I didn't go too far ahead in adding deltas. I'm like, negative 350. I want to get a little positive on one, but I think at the end of a day, everything was still good. So, but yeah, markets can do whatever, these huge swings, especially when the market has been driven by uh, it's very concentrated, very driven by very few stocks. Anything happening to the stocks will move the markets. Anyway, so a quick look. This is 1 day performance. Looks like Nvidia eventually ended up what, negative 5.55% down. The whole semi was in red, right? Which is, yeah, it is what it is. So in fact, I had a ASML iron condor in which a call spread had 1,000 and 1,020, I think $20 wide call spread, which was completely in the money when I left in the morning. And I was just thinking maybe I should roll up my put spread and or leave it. It expires next week. So I'm like, if it expires in the money, maybe I'll sell some of my ASML shares, because I don't think it deserve to be like $1,000 right now. And but good thing is I didn't do any change over there. So it's back to, I think it's still little in the money, but that's fine. I have one more week. Anyway, there is no complaints. I put on that trade when ASML was trading at around 850 or something. Now it's from there. Now it is like more than $1,000, which I think is too much too soon. So if it stays in the money, I'll probably sell some shares. So all right. So I think this is what we live in different times now. When the market, when Apple is green and the market is red. And there were times over this week when the market was green and Apple was in red. But now it's like this is a strange world, strange markets. You got Apple is no longer moving the markets, right? Which is good. Good to see some other players also coming in and having its impact on overall market. If we look into, I think the weekly, Nvidia Nvidia is still up like 7% for the week. Oh my God. Nothing can stop this beast. Right? How much is Nvidia up? Let me just pull and see how much is Nvidia up for let's go to Nvidia. It's up 82% for the year. Just crazy, crazy. So I'll be careful. I mean, I still hold some of Nvidia, but like 1/3 of my original position, and I'll hold it. You know, uh, I just can't justify at this pricing. And I look at the other one, SMCI, the other AI darling, that's up at 300% in 2 months. Crazy, crazy. So yeah, time to be careful. I don't know how long this AI frenzy will continue. Probably we will move from one player to another. AMD also considered as maybe mini NVIDIA, next NVIDIA. That's up 50% for the year. What other AI? I mean, these are some of the big AI players that I look at. 57% is Palantir, right? One other one which it got AI as a ticker, right? C3 AI up 10%. I don't even know why it's even, how it's still trading at $30. This is like a company that will just pick up whatever is the flavor of the month and change its business model. And I have seen this company moving from C3 Energy, C3 IoT, and now C3 AI. So I think Tom Siebel, he made his money, and he did good with Siebel, but now things are different. So what else you guys are watching in AI? Some lot of retail investors' favorite, SoundHound, is up 181%. I think it saw like 100% plus jump after NVIDIA disclosed their investment in SoundHound. I don't own these. There's another one, Nanox, like just getting a push from AI story, whereas AI is a part of its products, but who cares? As long as you are AI or AI adjacent, you know, market is willing to give you all the valuations. So time to be careful when you see these indiscriminate valuations based on one particular factor, right? And I know from a forward PE valuation perspective, NVIDIA may look cheaper, but one thing that we have to keep in mind is when the things, even the forward estimates are based on analyst expectations of what the revenue would be, right? And when things go publicious, analysts do tend to overestimate the overall market size, right, of any tech. And this is not the first time. So I was actually, I think it was what, last year, almost a year ago, I read a book around the whole, which had a, takes us through different market cycles of bulls and bears. I think, yes, I have this here by Maggie Maher. Okay. So this one. So I remember I said, let me go back and reread some of the chapters of this. And it's exactly parallel things I can draw from what was happening in 1970s, 1999, what the analysts were thinking and what the market was thinking. It's just that every time it's a different actors, different characters in the market, storyline is still the same, right? But make hay while the sun shines. NVIDIA is greater than GDP of Canada. Yeah, it is. It is. Not dissing on NVIDIA, but at the end, you entry price does matter. I think I have learned my lessons. And I guess every investor learns their lessons in different way, but entry price does matter. So be careful out there. What else caught your eye before we jump into the other, regular sessions, other stuff? Crypto is still going hot. I think last week, at some point of a time, I don't know when, I think Bitcoin hit what, 70K? Let me see. Does it show 70K anytime? 7 days. Let's pick 7 days. Okay, CoinGecko doesn't have it. Maybe it was 69K or something. All right. So maybe close to new all-time high is where and Bitcoin as well as probably Ethereum both are having a good month/good year, and all is driven by the interest from on the ETFs. I don't think there is any other story on Bitcoin. There's nothing much happening on Bitcoin, nothing special happening on Bitcoin right now. Ethereum does have a does have a new upgrade coming up. So some of the, I guess the bullish trend behind Ethereum could be attributed to the new upgrade, plus a lot of tailwind coming from the fact that there is an Ethereum ETF, which is already, been filed with SEC. Actually, this week, SEC postponed the decision on BlackRock's Ethereum ETF. And I don't think right now, probably market is pricing in, then it will be passed. Eventually, I think SEC has time till May to approve or reject ETF, but it's not going to be as easy as Bitcoin one. So we'll see. I guess these two are driving the Ethereum prices, and The way Bitcoin and the Ethereum goes, the rest of the crypto goes. That's the story. But I'm starting to see that the same mania that I've seen in 2021, so-called altcoins, shit coins, pick up whatever name, meme coins, Joe Biden coin, and whatever, Dogecoin, they all are now, starting to heat up. And yeah, those like frothy times will have started to come in. Like animal spirits are coming back, not just in the stock market, but also on the crypto side. So if you're playing with crypto, pick and choose the projects that you want to work with. Or if you want to gamble in crypto, yeah, just be careful in terms of what you're picking, right? So any other projects you're watching on crypto? Anyone else? I don't want to spend, you know, eventually we could spend 2 hours just talking on crypto. It's such a now it is becoming mainstream. So anyone else watching anything? Solana? Any Solana guys here? I know Solana gets pumped by VCs all the time because they have a big investment in Solana. All right. Could you please update the Zoom link on the website? Oh, the one on option. Yeah. Okay. Yeah. So because it looks like when the meeting expired, I had changed it on Meetup and I didn't change it on the website. So thank you. Yeah, I will update it. All right. What else? So okay. Let's start with the Reddit IPO. What do you think? Sachin says, I'm playing crypto only with MicroStrategy and Coinbase. So yeah, these are so I think it depends on what you eventually want to do, right? This is the same concept that investors have used when they were playing gold by doing, let's say, gold adjacent or gold related businesses, right? Let's get exposure to gold miners. And because if gold does good, miners will do good. My only concern in using MSTR or coin as a proxy of crypto today is both. I mean, any company, pick any company, or you could pick miners also, right? Riot, Mara, etc. That they have a company specific risk, which if you want to play in pure, let's say, Bitcoin, won't have it. Now, prior to the ETF launch, oh gosh, there's a hassle if I want to take exposure to Bitcoin, right? I'll have to open an account in another exchange and all that. But nowadays, that whole the issue is doesn't exist anymore, right? You can just buy, if you want a Bitcoin exposure, you can just buy an ETF, IBIT, FBTC. There are 9 ETFs approved, right? So or GBTC. So GBTC is like 1.5%. I think now probably 1.25% prices. Sorry, their fee. So I personally won't recommend. In fact, I moved all my GBTCs to I think ARK ETF. I don't know why should I pay the huge amount of fee unless you are in a taxable account wherein if you are now switching from GBTC to another ETF, you have to pay tax. But my GBTC was in retirement account, so I didn't have to worry about it. Yeah, so be careful because there could be a delta in terms of the tracking. Today, if you look at today in the market, that's what happening with the gold. So even though gold has hit a new all-time high, right? So GLDs are like 2 or 3.3. And, but if you look at the miners, GDX, miners haven't performed. So so even though both are in the same industry, if you're using GDX or GDXJ, which is a junior miners as a proxy of gold performance, even though the gold as a commodity is at a new all-time high, miners are no longer, nowhere close to it. So you have a huge tracking error. So Similar tracking error you could have if you're trying in terms of between the spot Bitcoin prices and let's say Bitcoin miners or MSTR or coin. Just my thoughts. I mean, earlier there was no other option but to, use these crypto adjacent businesses. Otherwise, you have to jump through the hoops of opening an account with exchange and all that stuff. But post January 10th, you have options, right? You have 11 other options to take ETFs. You'll have a higher beta in this master and Coinbase and a different risk profile than direct exposure through the ETFs. Just my thoughts. I'm not saying right or wrong, but I hope you understand the risk profile or the what different type of risk that you're taking when you're investing it via the other companies. All right, let's jump on to today's session. Everything that we talk here, there are new folks, so I just want to make sure you understand this is not a financial advice. I'm not a financial advisor or investment advisor. I'm just a regular guy trying to just work through on my portfolio, right? And provide for family. So take it a little bit of education, little bit of entertainment. If you find some fun stuff in here, but yeah, main thing is let's learn together how to invest. That's the main idea. Okay, so let's I'll start with Reddit IPO unless someone else have any other question that we want to go through before I jump onto Reddit IPO. And let me see where the document is. All good? So we can start with Reddit. Alrighty. Any thoughts on Google? Sure. Yeah, Google. I mean, I'm bullish on Google. Have had their own problems recently around AI, which frustrated me, but also gave me an opportunity to add a little bit Google at a lower price point. If I look at all the those magnificent seven, Google is one of those which is attractively priced in terms of the amount of cash it generates, the amount of revenue it generates, and where it currently trading, right? Market has punished Google because their foray into AI failed 3 times, right? And how many times can you do the same mistake? So first, when they launched Bard, it provided a wrong answer around whatever space shuttle, right? Or I think it was image taken by Hubble. What? It's mentioned, it gave a wrong answer about some astronomical question. Second time they were trying to launch Gemini AI, the demo was kind of a little faked one. Third time they tried to do a Gemini AI with generated images. It produced the wrong images of historical figures, again bombed. So yeah, it had its own issues, but I guess probably they'll be able to work out those issues, even if we don't give any valuation from AI. Their current business is, I think, still big enough from my perspective. And yeah, so I'm bullish on Google. I don't know if you had any other specific question. I mean, it generates tons of amount of cash, guys. So, and that does matter. Strong balance sheet, good cash flows, and some cultural issues are going around. Some folks are calling on for, CEO's head. That's fine. So you could change CEO, but it's one of the best business models that they have on the planet. Right? If you think AI is gonna kill the whole search, I don't think that's gonna happen. Probably they'll integrate AI into search, and we'll still go to Google to, for all our daily needs. All right, so let's jump into Reddit IPO. And this is when I look at an IPO, this is the document that is available for us as an investor to go and understand about a company, right? So this is called S1 filing. You can find it on SEC website, which is, let's say, this is where you go. You say Edgar So let's say type Reddit. Okay, you find S1 registration statement, right? And you can download from here. So that's where our search starts to understand this company. Okay, and let me just make sure. Okay. All right, so let's go through this, and then based on whatever we find and about this company, and we'll create our own investment thesis, right? Good, bad, ugly, whatever. So let's start with Reddit. What does Reddit do? How it started? So we're gonna go through that. We'll come back to these metrics. Let's. What is Reddit? So it's basically community of communities, right? So if you go to reddit.com, I think Reddit became very, very popular during 2021, specifically because of Wall Street Bets, which is called a like subreddit. So within the Reddit, it's a platform that provides, gives an ability to users to create their own communities. One of a community is called Wall Street Bets, and that's where the whole GameStop mania started, right? And it just burst into the scene because CNBC, Fox, CNN, Wall Street Journal, Bloomberg, everyone was talking about Wall Street Bets and what they are, I would say, perpetrated on hedge funds by diamond holding GameStop shares, right? So suddenly it burst onto the consciousness of even those people who never have had Reddit account, right? I have used Reddit, but oddly. But when Wall Street Bets came in, yeah, I did go. I started looking at what the heck is happening. And it was fun to see the membership of a subreddit, Wall Street Bets, growing from like 2 million all the way to 10 million pretty quickly, right? So that's what basically Reddit provides a platform to create different communities, right? And now Reddit is going public. It's not a young software company. It's been around for 18 years, right? So it's not a company that like 4 or 5 year old trying to go IPO. It's been there for 18 years now. So what does Reddit going public mean for their community, and what do they want to do? Little different is they are actually reserving 1.3 million shares for funding some community related programs. They are also inviting, which is like different from regular IPO, is they're also inviting moderators and users to buy Reddit stock at the IPO price, right? So otherwise, I mean, if you and I were to buy, unless our broker supports it, or unless you have friends with those investment bankers, we all buy the stock when the stock actually get listed on the exchange, and then when it start to trade on exchange, right? We don't get an opportunity to buy it at an IPO price. But if you are a Reddit moderator or maybe super user, they are reserving some shares to sell directly to them, right? So I didn't see anything else interested in this. Next, let's look at what the CEO or a founder has to say in their letter to all the prospective shareholders. Right? So more than 76 million people visited Reddit every day. So it's at the end of the day, this is a social media company. And one of the very important metric for any social media company is your users, right? User growth. What's your user metrics? Look at DAU, daily active users, monthly active users. Go and look at a Facebook, pull up their metrics. That's all they'll talk about. User metrics, and then how much average revenue I generate per user, right? DAUs, MAUs, and ARPUs. So Reddit has got 76 million people. It was founded in 2005. So it's been around for 18 years. The CEO or this co-founder came back as a CEO in 2015. What else? Yeah, standing up for retail investor as like during Wall Street Bets. They have close to 100,000 subreddits, right? So Wall Street Bet is one subreddit. Similarly, there are other communities. So they have close to 100,000 communities or subreddits, right? So that's, at the end of the day, it's a social media company making, generating revenue through advertising. So that's all they do. How do they make money? By selling advertising to advertisers. And now they're also talking about, creating a marketplace. So I'm gonna go a little more detail a little later. Okay, so stay here with me. And now because there's the AI, and they have 76 million daily active users who have been generating content on the Reddit platform, that content itself becomes very valuable for training those your LLM models, right? So another business model that they're thinking is doing data licensing. So that's another business segment. So nothing much otherwise on the letter from founder, right? Okay, so let's move to page number 12 for company business. So how are they gonna generate? Let's look at some of the information or data available on Reddit. They have close to 1 billion posts and 16 billion comments on their website. It's a top 10 most visited sites in the United States. And we can ignore all this. We'll come back to financials. And they have, again, time and again, they talk about that they have almost 100,000 subreddits. User generation content, it is authentic content, blah, 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 blah. Nothing different out here. Now, here they talk about how are we gonna grow our user and engagement, grow awareness of Reddit. I'm like, guys, you're there for 18 years and still haven't figured out how to, you're talking about awareness. So I found it really strange. Okay, grow awareness so that more people know about Reddit, they engage more, add some video searches, pretty standard stuff for any social media company. So let's skip all that. Let's look at overall, what's their TAM, total addressable market, right? So, but before that, so this is what their overall business profile or the models look like. Currently, revenues through advertising. Then this data licensing is basically licensing the content to the LLMs. They're already, I mean, it's already happening. I think Google has paid Reddit for using their data to train their models. And then finally, they want to move towards user economy, which is, hey, you have millions of users now, how you can monetize the time that users spend on their platform. So they're talking about creating a developer platform, contributor platform, or creating a marketplace where you can go and, order, I want to edit this photo. So they do talk about, I would say, as a gig economy. You can go and get some gig work done. I want this video file to be edited or etc. etc. So that's their future, is what they're looking at. All right, let's look at the TAM in terms of how big this market could be. So overall, where's the TAM? Okay. So like they have three business segments. Advertising, they talk about advertising is currently $1 trillion, right? Data licensing is another $1 trillion, is where I had. Yeah, it's another $1 trillion. And then the user economy or called marketplace is around $1.3 trillion, right? So, but again, this is what they call as a total addressable market. Don't get too excited by like a trillion here, trillion there, 1.3 trillion. What does a trillion amount, even mean among friends? This is total addressable market. How much of that can Reddit even address? We don't know. Right? So I don't give much credence to the fact that, yeah, the worldwide advertising market is of $1 trillion. So what? Right? We got a Googles and the Metas of the world who are capturing a big market, tell me something which is specifically, you can address and capture. So these numbers look good, but kind of a little meaningless, right? To make any informed decision. So let's look at a little bit on their financial number. We'll come back to financial number, but something that caught my eye was they have a $800 million generated as in the most recent year in 2023. And look at this, right? Out of which research and development is like 438 million. Like 50% of your revenue is going in R&D. And then I looked at the comparative numbers, right? So this is where I'm like, what are they building? Are they building like some rocket science, or maybe some tech to build a colony on Mars, like what Elon Musk is doing? And we're not talking about a new company which has to invest in so much on product development. It's an 18-year-old company. So you go back and look at the comparative, let's say, social media companies, how much are they spending on their R&D? So here's the Meta platform, right? 2023, R&D expense is $38 billion on a revenue of $134 billion. That's like, okay, I'm not that great at math, so let's say 38 divided to 134, 28%. Let's look at another, let's say Pinterest, right? Similar business model. It's a social media company generating revenue through advertising. They had a revenue of $3 billion and spending $1 billion, close to $1 billion on R&D, 30%, 1/3 of it. Let's look at Snap. $4.6 billion in revenue and $1.9 billion on R&D. So it looks like closer to Snap, which is like 40%. And we all know, if you have to pick up Pinterest, Meta, Snap, which company would you pick up as a shareholder? Right? I know it's a rhetorical question. It's a Meta. Meta stock has been doing great. They've been growing revenue like crazy. So I find it really, really strange that they're spending like 50%, more than 50% of their revenue on R&D. And after 18 years of operation, they aren't even able to run their operations profitably, right? Look at operating income, it's negative. What the heck is happening here? So as a business, so far I haven't seen anything which looks to be attractive, right? And now we have a lot of others, social media companies, FB, Pinterest, Twitter, Snap. Do we need another one like a subreddit? Right? So let's continue to look at in terms of why it's like their financials are so screwed up. Right? Let's look at let me tell you what else I found. Let's explore that. Let's go to page number 63, where they talk about their risk, which is what did there? Okay, let's go to page 100. The risk that I wanted to just highlight was they do hold a Bitcoin and Ethereum on their balance sheet. So which, yeah, depending on how the crypto goes, it could be a risk or it could be a tailwind. Okay, now I want to look at, fine, if I give you money, how are you going to use the money? So this is where the management will specify in use of proceeds. We're looking at a use of proceeds. The principal purpose is for financial flexibility. That's great. Create a public market for a Class A common stock and facilitate an orderly distribution of shares for the selling stockholders. I know this is what generally happens during IPO, but I've not seen companies stating saying, hey, I want to go IPO so that the existing shareholders can sell it. That's the prime objective. It means if I'm buying into this IPO, I'm a liquidity exit for the existing shareholders. Right? Okay. They're very clear. They want to provide a liquidity to the existing shareholders, right? For through this IPO. And then what caught my eye was, if this IPO goes and it achieves $5 billion valuation, the CEO will be eligible for another like 660,000 RSUs, which will immediately vest because it achieved $5 billion of capitalization. Right? So huge grant to CEO in terms of from stock perspective, huge stock grants to them. So I'll have a little more additional data on this whole stock stuff, which I mean I found it really pathetic. So look, okay, so they never made any money so far. The accumulated deficit is like $700 million. Is the losses that they have accumulated over years of operations. So let's look at the user metrics. So because it's a social media company, the number of users, active users, is an important metric for them. And now if I'm looking at total DAU, quarterly year-over-year growth, they're growing at 5%, 7%, 15%, 27%. Not a
Is this
huge
for
growth.
Meta? Vivek, is this for Meta or Snap?
This is Reddit. We're talking
Reddit.
Reddit. So this is Reddit S1. Okay. Yeah, so user growth, not that great. I wouldn't say, if it was, let's say, Meta growing at 7%, 8%, I can understand because they already got like more than 3 billion people onto their platform. Right? We have only limited number of people that have access to internet, right? 4 or 5 billion. So Meta kind of already saturating their the users that they can reach out to. But I mean, even with that, I think Meta grew much better this recent quarter. Reddit, at such a smaller base, is kind of was growing in just mid-teens, and only in last 2 quarters, they actually reached out like 15 and 27%. So not that exciting when it comes to growth, at least for me. So what else? Monetization, yeah, it's primarily advertising, and they had what, $804 million of revenue, the one that we already saw. Where's their ARPU? Yeah. ARPU is the average revenue per user is 3.42 worldwide. Facebook/Meta's revenue is $13 worldwide. And actually it is declined in recent quarters. Even if we ignore this recent quarter, the fact that overall it's only $3 does mean, they have a difficult time to monetize their user base. All right, let's see what else caught by. Okay, this is yeah, I mean, we are in early stage of monetizing. That I found really strange because they are been around for 18 years and call themselves still early. And they're not building a nuclear reactor here. All they're building is a social media company. Right. So I don't understand being 18 years and say, oh, I'm still early in this game. Let's look at page 133 next, in terms of stock-based compensation. So in if you all look at in 2023, they have equity awards of $269 million to CEO and COO as a stock-based compensation. And they had what, $804 million in revenue? Oh, what the heck is happening here? It's like more than 1/3 of your revenue is going as a stock equity awards to CEO and COO. How is this even legal? This, to me, looks like a legalized version of highway robbery, right? In terms of, rather than using a gum, just using a stock-based compensation to enrich themselves. Right? You're making a few $1 billion, and then the management getting like a couple of $100 million. I'll live with it. It was like more than 1/3 of your revenue, guys. What the heck is happening here? So another one, so we already talked about $269 million. And so these grants that they have, CEO and COO, and I guess even the CFO, have something called a double trigger mechanism. These are double trigger RSUs, right? So half of them are based on performance, and half of them are based on, hey, just because you are in the service, right? You're just warming your seat, and hence you're granted, let's say $300+ million of stock-based compensation. So till date, it's like $750 million double trigger RSUs, in which it's not based on performance. It's based on just because, hey, it's also based on the service length for them. So I find it really ridiculous in terms of how generously this company is just awarding stock-based compensations to their, I would say, leadership, right? And there was somewhere, my gosh, this didn't save it, but let me see if I can get back to somewhere I saw a note wherein this leadership, they actually had the RSUs on condition of performance. These were like an incentive RSUs on condition of meeting certain performance goals. And later on, the whatever the compensation committee, they actually changed it to be this double trigger and not based solely on performance, right? Like, who's looking out for shareholders over there? Looks like no one in their board. So to me, it looks like to be like a way to enrich themselves from a shareholder's money. So let's look at some of their products, right? So which is, since they are selling to advertisers, they have products for advertisers in terms of how they can make money. Advertisers can make money. So they have ad-based products like auction-based delivery. You can get a promoted posts. These are called Reddit posts, which can be promoted by advertisers. You could actually get your placement within the conversation, right? Some people, if you have a post and others are commenting on it, you can put an ad over there, or there are shopping ads. So essentially, different ways in which advertisers can make use of the space on Reddit platform to show ads to users. Right? Nothing much. I mean, rest is like a regular mumbo jumbo around. Hey, we have a users who have, there are specific communities that you can address. If you want to address us, let's say a soccer moms, there's a community for that. You can basically have some targeted advertising because they have a groups which are have a, all groups are aligned for a specific interest. Let's go to see how the management, etc., are compensated. So Steve Huffman, who's the CEO, overall compensation like $193 million. Jennifer Wong, she's a chief operating officer, $92 million, and CFO is got $600 million. Right? For a company that is making $800 million as a revenue, has never been able to generate profit, the CEO taking home $193 million. Their annual base salary in June 2023 was increased from $200,000 to $450,000 for CEO. For a COO, it jumped from 562 to 600. You get a jump in your salary more than 100%, where the revenue is increasing only at 20%. I mean, I would love to work for this company, man. as an employee. Uh, Again, so yeah, I mean, and forget about last year. As recent as in February, their base salaries were again increased. Right? And on top of that base salary, you got this a bonus, which I'm fine with bonus because bonus are there to incentivize, performance. So CEOs got 125%, and Wong's CEO 60%, which is all fine. Yeah, this is what I was talking about. When initially they were granted RSUs, they were all based on performance, and this is on page 171 if you want to go and look into the details. And then later on, they canceled all the PRSUs, which is performance-based RSUs, and re-granted the new time and liquidity-based RSU. Means if you keep your seat warm, you'll get these RSU, or if you take the company IPO, you get these RSUs, right? So to me, it looks like I said, legalized version of highway robbery. Take money from shareholders and grant it to management, right? Now let's look at the financials, and I think that will be the last part. So we looked at management, we looked at how the management is compensated. Let's look at what the financials are. So cash and cash equivalents, they got $401 million. Marketable securities, probably all treasuries or corporate debt, is almost $800 million. So overall, almost $1.2 billion of cash and equivalents. Let's look at revenue. Revenue is $804 million. Expenses are $944 million. So that means they got a runway of around what, a year or so, right? Maybe 1 year and 3 months of runway available for this company. So you need to raise money, right? So what are the ways in which companies can raise money? Number one is VC, right? Venture funding. No VCs are willing to fund any loss-making companies, right? VC funding, and we have seen over past many months how many startups have died because of lack of VC funding. So VC funding is difficult to come by. You could raise it through debt. Go and raise a debt, but with the interest rates higher, debt becomes super, super expensive. Can't do it. Or you raise money by generating, when your business is actually making money, generating cash through your business, which this business is not generating any money. If you look at even the cash flow statement, where's the cash flow? Yeah. They are not making any money through their operations, like 75 million loss, right? So business is not generating money. The fourth one is, let's rip the public, let's rob the public by selling shares to public. I know I probably a strong word, but that's the fourth way to raise money is let's go and sell your shares to the public market and raise through equity grant, right? So yeah, why not? And that's why the company is in the market to raise funds. I guess that's all I have. So for me, specifically for me, I'm not touching this company. That doesn't mean that the company may not get an initial pop because it's Reddit, right? Everyone knows this, and there are a huge community behind it. Maybe if Wall Street bet get behind that much, who knows? But I would rather wait to see how they're able to manage their operations. 18 years in working and not still being able to run the operation profitably. When you're just building a social media company, that's a little difficult to digest, at least for me. And specifically in the case when even in the similar segment, we have a better opportunities available. Right? If there was no Meta or not other social media companies, I might look at this, gosh, I want an exposure in a social media company. This is the only one. Yeah, maybe I'll cut some slack to Reddit. Not right now. Okay. So that's my thought on Reddit, looking at its IPO document. I know I just rushed through it. It's like 200 plus pages. So if you are really interested in it, spend some time. Think about, look at the numbers, look at what they're doing, and then make your own judgment. I really don't like where the CEO is on the, like more than 1/3 of a revenue is just going to compensate the people at the top. Right. So clearly someone is not looking at, clearly the board isn't doing its duty. Let me put it that way. Who are the underwriters and the reviews? I don't know who the underwriters are, but we can search for it. And I really don't care who the underwriters are, because the underwriters try to push WeWork at $42 billion, wherein if you open a WeWork S1, you realize that it's not a tech company. It's a real estate company. So underwriters get huge fee, so they will push whatever they can. Underwriters for Reddit IPO. Morgan Stanley, Goldman Sachs. The same regular culprits. I think WeWork was JP Morgan. So they tend to make huge fee, right? Whether investors make money or not, underwriters will make money. I see another comment. Oh, P. Kondavar. Oh, welcome back. I didn't realize. Other than Meta, others are not able to make a big impact in a community like Reddit was able to make. So yeah, so here's the difference, right? I'm not here as a social activist. I'm trying to allocate my capital, and I would allocate my capital as a portfolio manager to the where I can get best financial return. If I was thinking from a social activism perspective, probably I'll have a different opinion about Reddit or other businesses, right? So, but I'm coming purely as a portfolio manager or as a capital allocator. From that role perspective, I find Meta better than Reddit. Pishan, so they will have to be much more aggressive in showing ads. Yeah, so again, we looked at Snap's results, right? Even Pinterest results. The big ones like Google and Meta, they were eating the lunch of these smaller social media companies. And companies like the Reddit, etc., who are much smaller in scale, have a lot of work to do to fight against these big ones. The big ones are becoming bigger. And looking at the numbers, etc., I mean, if you continue to bleed money, like spending more than 50% on your R&D, you're not gonna have that financial strength to go against these big companies. So I don't know, guys. I have a very, very cringe feeling on looking at its IPO. That doesn't mean that doesn't mean that the stock may not pop. These are two different things. Stock may still pop, but from a business side, so far I don't find anything which is interested in Reddit. So I'll give it a pass. We'll watch, sit on the sidelines and watch, come back and review it, let's say 6 months later, right? Now, because it'll go public, we will have access to its quarterly statements and financial information, and we'll come back and look at it. There's no need to hurry. So that was Reddit. Any questions on Reddit before we jump on to other? I'm glad that we are able to, finish this. It was a topic pending from our previous week. Any questions on Reddit before we move on to our other part? Let's get back to
lot of hype was there regarding the Reddit, but you made very clear the pitfalls of the Reddit, basically.
yeah. I mean, so today in the market, we could see many more companies because markets are hitting all-time high. Animal spirits are back. We are seeing stocks which are like $2 trillion company moving like penny stocks, right? Up down 10%, up 5%. So the markets are really very hot. And when the markets are hot and people are not thinking while investing, a lot of companies will find it as an opportunity to come and raise money. Right? Now people are, if you start to chase the market, you're trying to find next Google or next Meta and think maybe Reddit could be the one. And who cares when you look at your 401k and you say, gosh, I'm up like 30% since last year. You feel wealthy, and then the value of money that you're trying to invest is not that valuable because your portfolio is already good, right? Oh, I'll throw in like another 10k out here. So we could see a lot of companies trying to come public and take advantage of this hype in the market. So as an investor, we just got to be careful and see which one we want to really pick through. And I am generally don't want to invest in IPO because we are at the worst. We are at the disadvantage. It's a company who is at the 100% advantage when they are coming in an IPO because they'll clean up their books, do all the window dressing that needs to be done, and to be prepare themselves for IPO. I would rather want to wait for 6 months to see how the business has performed before I invest in IPO. I think I've done probably one IPO, and because that company was like very profitable, and that also didn't work out well. So yeah, so there will be a lot more other opportunities. Let this company come and play in the market. Let it show to us that it actually deserves our money. So we don't have to hurry. We don't have to get into FOMO. All right, let's look at our. Maybe we come back to this later. Let's say market performance. Right, we are up 7.42% for the year. We're looking at S&P 500. Nothing to complain about. We are only 2 months in, barely, yeah, just above 2 months into the market, and 7%. Pretty happy. But if you're not in the market, are you feeling the FOMO? This was a good article written by Michael, is known as irrelevant investor, which is Bitcoin is just 3% from its all-time high, and this is like I think maybe 2 weeks ago, so the numbers could change. But the most important, where I want to draw your attention, is this: FOMO is not evenly distributed. The more online you are, the likelier you're about to feel FOMO. Right? The less secure your finances, the likelier you will feel FOMO, because you would want to capture and make money quickly because your other part of the finances are not that secure. And the best is, the more your friends are making money, the likelier you are to feel the FOMO. So not everyone feels, and it is very difficult. It's not easy. Easier said than done. Is, hey, don't get into FOMO. Just be rational. But it's easier said. And this way, it is very important to, at least for me, is before we even talk about investing, I always look and say, how about your pre-investing stuff? How is your rest of the financial doing? How are your personal finance set up? Unless you have that foundation of a personal finance set up correctly, we will get into this because we're trying to make money quickly. And anything that happens quickly in the stock market is that you actually lose money. I don't think anyone has made money quickly. Actually, you end up losing money, as quickly as what you have made. So don't have to get FOMO. I think I tweeted one day wherein I think it was Nvidia or something else, or it was a Bitcoin was ripping. I'm like, I'm getting into FOMO. I'm going out for a jogging. And that's perfectly. I just go out for a walk. When I try to feel something, try to do some stupid stuff, I'm like, I'm going out for a jog because now I'm not thinking. So if you feel, says, can you please share the link to the article? Yeah, so I'll find it out, and next week I'll share the link. But yeah, it's now I'm starting to feel this happening in the market. I'm not sure if this is a top or not, but yeah, it's a difficult beast to deal with. Looking at a regular, this indicator, we are still in a greed phase, but better than in extreme greed. But yeah, greed is not good. Greed and fear both are not good. We got to take advantage of it. So earnings are still there. I think I don't think I own any stock which is reporting earnings next week. But what I will be interested is looking into Oracle, specifically how their OCI is doing, which is their cloud offering, Sentinel-1, because it's in a cybersecurity space, which is interesting. I'm interested in, and Adobe to look at what's their AI story, how is that panning out. Any other companies that you're looking at or you want me to look at and maybe bring it next week? What else? Who else are reporting? The big names.
Ulta. Ulta is a big mover.
Ulta. Which day? Ulta Beauty?
Thursday.
Oh, Thursday.
Mm,
Oh, there you go.
Mostly, most of the stocks are IWM stocks. So I think
Yeah.
small cap is.
Yeah, all of these medium caps. Yeah. Ulta is reporting.
Can you share more about Oracle, like insights? Like, is it worth it?
I actually didn't look into Oracle recently. For me, the Oracle story was their OCI. So maybe next week I'll bring up the Oracle, because then we'll have a data of how their cloud story is growing.
By looking at charts, like, is it undervalued, overvalued?
I generally don't look at the, because charts doesn't tell me how the business is doing. It just tells me that in a short term, what are people willing to pay for this, right? And at this point of a time, for let's say, so there are a few things which I look at just from option perspective, right? Not from a long-term perspective. If I'm trying to sell an option, I look at, is it too hyped up to sell a put or sell a call? So there are a few things I look at. Oracle, if I look at, doesn't seem to be too undervalued short term, right? Not from a long-term perspective, but short term doesn't seem that it is too undervalued, because its RSI is at 49. It's not at like 20s. RSI is 49. It's well above their lower Bollinger Band. Trying to look at whether it is, can I short it or is it too overvalued? Doesn't seem to be the case.
There is
Right?
one earning gap of 126 to 119. The last
Yes.
two earnings back.
Yeah. So earnings, anything can happen during earnings. Right? So let's look at the earnings jump. So that a 12% post earnings, there are 12% jump. There are 13% jump. Two of them were negative. This earnings was like kind of immaterial. Doesn't really matter much. Oh, yes. Geez, they have. Oh, I'm afraid of this. They are moving into Charles Schwab, and some of my settings have changed. But did you guys know last week? I mean, this week we had an issue with the Think or Swim, the Analyze tab. I in fact then tweeted them, like, guys, when are you gonna fix it? The whole Analyze tab was broken on Think or Swim. And okay, let's look at 3-year data, 3-year 1 day. Yeah, so that like 10% jump post earnings, 15% jump. So I really don't pay much attention to whether it's going to go up or down, because we don't know. It all depends on post earnings. It all is based on what actually happens on that particular day. Even if you know the earnings data prior, I don't think we can still make a trade. But it looks like it does move, at least on last two earnings, it has moved significantly. But in 2022, not that much. probably, yeah, one of them was like 10.4%, other was like 1.35, 0.89. Let's see what is market expecting from an earnings move perspective. Almost $10. So let's pick up their straddle. And what is straddle worth? Yeah, $10.18 is what market is expecting as a move by end of 15th March, because that's the only one, right? Yeah, there is no other one prior to earnings. Yeah, so around $10 is the market expectation that it may move. Now, whether it will move up or down, we don't know. It doesn't tell us the direction. You look at the straddle price, you will get to know what's the expected move is, but not the direction. Which direction it will move, we don't know. So yeah, I'll maybe next week we'll bring up Oracle. Adobe, yeah, Adobe is one company which I never owned, and I always like secretly wish, oh, I should have owned this. I should have owned this. I missed the owning it when it was punished after they announced that they want to acquire Figma. I think Adobe was punished all the way down to 250. Right? And I didn't buy that, but yeah, now it's like, oh, back towards 600. I don't own this. Don't try. Yeah, 550. It was 600 pretty recently.
Vivek,
Mhm.
I noticed this week that there was a lot of layoffs or layoffs still doing. So what I stuck up there was what I'm trying to do is compare how life was 208, 2018, 2019 to the last 14 months.
Mhm.
So what do you think of it? I have my my views.
Hyper more cautious environment. Yeah, so I mean, I don't know, 2018, 19, uh, right from after, for last 10 years, it's been free money. So like a lot of growth in all these tech companies, right? I mean, you can hire an engineer because there's not much of cost of hiring an engineer because you already can raise money from market at 0% interest. So, but not the case since 2022, right? And now they're feeling the pinch. So yeah, layoffs are continuing. Forget about tech. I think it was a JP Morgan or something that came and said like 80% of some of the work that's done by which kind of a work was it, can now be done using AI. So why should they, hire so many people, keep so many people on rolls, or maybe JP Morgan actually had a layoff, but it's happening in, so any company where you can do a repetitive work that can be done by AI will be taken over by AI. So we need to either upskill ourselves or find something to do with our hands, because AI can't fix a faucet. AI can't weld a broken tube. but AI can write nice marketing summary. AI can write code for you. So you probably need one senior engineer assisted by AI rather than one engineer and three junior engineers. So yeah, it's a different story. I mean, different times, and every industry will go through this. Right? Horse and horsemen were replaced by cars, but then those horse cart drivers, I don't know if I call them drivers, but they had to find a new way to earn livelihood.
Yeah, this is another perspective I got from some company.
Mhm.
Because he's a new immigrant. He's even a more recent immigrant than you. What they're doing is trying to build a town. The town in I don't know, Solano County. So that was a very good video.
Okay. Yeah, maybe I'll probably watch it later. All right. So what did I buy or sell this week? Added to little position on Tesla because it's time to build on Tesla and start selling covered calls on Tesla. So wanted to reach out to a level wherein I feel now comfortable to start selling calls to reduce the cost basis. Added a little more to Palantir. Palantir had their AIP Con 3 conference wherein a lot of customers of Palantir came and talked about how are they using their platform. So I liked what I saw, so I added a little more to that position. Of course, bought Google. I think earlier someone asked, thoughts on Google. I've been accumulating Google for some time. So just part of a regular purchase, I bought Google. When I see some of these companies which I have on radar getting punished, that's the time to, go and buy them. And then I added a little more to Li Auto. Li Auto, if you remember, my thesis was this is one of a few EV companies that have been actually operating profitably, right? Chinese EV companies, NIO, Xpeng, none of them actually make money. But Li is the one that actually makes money. So I think all I'm doing is a circulating capital from selling option premium on NIO and Xpeng and moving that to Li. So yeah, I bought a little bit of shares. I looked at how much of option premium I gathered this year from NIO and Xpeng and bought equivalent amount of shares in Li. So nothing much to read on, on this one. But these are the 4 buys of stocks for this week. Sells nothing. But I do continuously, have a lot of option trades. So if you are interested on what my open option trades are, I think I shared a link last week, but I can bring it up. And if you have a questions, bring it up in this meeting. But oh, come on. Yeah, so these are still open option trades, which I have. As you can see, there's a lot more. I think majority of them are now for April. March is closing down. So I have a Apple Strangle still sitting on Apple. So I'll buy Apple if it goes down. Airbnb had a Strangle converted into, I think now I converted into a straddle. Yeah, on Friday I rolled up and converted to a straddle. Blah blah blah. There are many which are still open, but the ones which I show here is just the stock buy and sell. Okay. All right. What next? Yeah, this one I really want to talk about today is because I was I attend another meetup which is run by some Bitcoin OG, and we were talking about I think a young gentleman who's his exposure to crypto is through GBTC. So I had a question. I'm like, why are you still staying with GBTC? Is it in your retirement account or is it in your taxable account? He says, no, it's in my retirement. It is in my retirement account. And I don't mind paying whatever percent that GBTC charges, which is I think is 125 basis points. Because it's only 125 basis points. I've been with GBTC for quite long, and I think there's a lot more liquidity in GBTC. So then I actually showed him the table of how that 1.25% actually matters a lot, especially if you're young or if your investing horizon is very long, right? So then I thought maybe I should come and share here as well in terms of the impact that small fee or small taxes can make on your overall investments. Right? I've seen, and I was a victim of, I was also so ignorant when I started my journey is, yeah, let's sell this. So what if I have to pay tax? So what? Right? We made gains. Let's take some money in and we put it back in the market. We feel good when I actually see a realized profit that I actually made so much money at the end of a year. When I look at my brokerage statement and it says realized gains is so, X amount, you feel good about it. Nowadays, I've kind of flipped. I'm like, if I don't need money, I don't have to sell it just to feel good that, hey, I made money, that to realize the gains. This is an interesting chart, which shows us the impact of taxes on investment, right? Let's say you're compounding 20 times. Ignore 20 times. If you're a 20-year-old trying to invest, and you got like a 50-year of investment horizon by the time you turn 70, that's like 50 years. Assume investing in SPY, right? That gives, let's say, on an average, 10% return on investment, means you're going to double your money in 7 years. So in 50 years, you're going to double your money 7 times, right? So let's consider that and look at, doubling the money 7 times. How much will it impact if you're getting taxed at 25%? So I'm not going to go all the way down. Let's go only till 7. 1, 2, 1, 2, 3, 4, 5, 6, 7. Right? So started with $1, and here's the difference. If you're being taxed as 25%, after 7 compounding, you end up at what? With your taxes, you end up at $50, whereas could be $128. Like there's a huge, huge difference. And if you let this buddy pass on to your heirs, and they have another 50 years of compounding, look at the huge difference that it can make. So this is, and I know this is very basic math, but that's why compounding is called eighth wonder, because our mind can't think in compounding terms. We always think linearly. We are not accustomed to thinking in compounding way, in exponential way. We are always accustomed to thinking in linear way. So while you think, yeah, how it matters, I make gains, I pay 25%, I'm gonna get back right in the market and invest whatever remaining $75. Okay. But if you're not taken gains because you didn't need money, look at the amount of a difference in terms of what you ended up making. This is for like 50 years. 1, 2, 3, 4, 5. This is, let's say, for your years, 65,000 versus 7,000. If you're doubling 20 times, like 72,000 versus $1 million, does make a big difference. So taxes do matter. And sometimes I believe maybe if you don't do anything else, but just sit tight and don't get FOMO or greed and sell and incur taxes and go back right in, that will just work fine. Now let's look at the impact of fee. So let me just bring this up. Okay. Hold on. Let's bring this. Similarly, how much is fee impacts you? And this is where I have my concerns around, paying huge fee to people. So this is an example we took. You're starting investing in SPY. On an average, gives you 10%. Starting with an initial amount of 20K. Let's say you're 20-year-old. Yeah, starting your journey, right? You have 2 options. Either you go to advisor and pay to advisor, which on an average charges 150 basis points, which they eventually ended up, most of the advisors end up investing in these index funds only, right? Or you can buy SPY, or I guess VOO, but I'm more SPY, so I know SPY has got 9 basis points. You won't feel the difference if you're in first year, right? We are like self-managed versus advisor managed. The difference is hardly $300. How does it matter? I don't have to do anything. Advisor is gonna do for me. I'm good. Right? The fun starts. You start to increase your time horizon, right? Starting at a 20 years, you got a 40 years. Let's say by 65 when you actually needed money, or let's say 70 when you're gonna retire and you need money to work for you. Look at the difference. You lost almost more than $1 million. If you are self-managed, would have given you $2.2 million. Advisor is like $1.1 million. You cut in your portfolio into half just because of this fee, nothing else. So fee don't matter if you're thinking in terms of 1 year, 2 year, 5 year. But fee matters a lot, and so are the taxes if you're thinking on a long term. And it is look at the chart. I mean, there's not much difference, but the moment you start to go a little farther out on timeline, the difference itself starts to compound. So that is, I'm stickler for low fee, even if it means a little bit more of a work, because it's over a long period of time, it makes a huge difference. If you wait for another 10 years when you're 80, the difference is more than $3 million. Forget 80, like 70, right? When we want to retire, to earn another $1 million, I have to work for another like 5-6 years extra, right? 10 years extra. So that's 10 years of my life is been taken away by the fee that is being charged. Look at it from that perspective. So fees do matter, but we won't realize it because we can't think in these compounding terms. So I thought I'll share because I really took some time and shared with that young gentleman. And then he started inquiring, okay, what else can I do? What are the other options? Then it made sense to have that discussion. So yeah, if you have a low fee options, always go with the low fee options. If you have equivalent amount of product, fee do matter. So I see a question. What's the replacement alternative for GBDC to stay in crypto? Like I said, you got now 9 options available, right? 9 replacements. I think I have a ticker, all that. Bitcoin ETFs. So the one which is the biggest one is IBIT. And again, all of them have a little difference in the fee, but all are way, way, way better than GBTC. Right? So another fun exercise. With this, we talked about SPY. Let's talk about crypto, right? Bitcoin. Is it fair to say that on an average, Bitcoin has been compounding at way more than what SPY has done, right? So at least double. Look at the difference it's going to make, or let's say 15%. The more the asset grows, the more the rate at which asset grows, bigger is the difference between doing self-managed or at a lower fee versus doing with GBTC. So let's put this, GBTC is a 1.25 and ARKK, or I think IBIT is like 20 basis points, right? I'm just putting these numbers. For 50 years, look at the numbers, 11 million versus 19 million, almost double. You didn't have to do anything. You just picked the right instrument. Just picked up the right instrument with a lower fee, and rest is the same. So please, fee do matter. If anyone tells you, how come it matter? Pay a % here or there. It doesn't matter if your outlook is a year or 2 year, but if you're looking for next 40 years, it does matter. So I think that's my whole spiel. Sorry, I was very passionate about it because when I saw that kid putting all his money in GBTC, I'm like, come on. All right.
Vivek, I have to disagree with you on terms of taxes, but I agree with the point of the fee structure. You don't see stocks move up, double up every so often. In between, you have the stocks go down. For example, if you take a look at the S&P 500 for the total 20 years return is 346.92%.
Mm-hmm.
Okay, so if you take the profit when you have a chance and you can reinvest at a lower point basis, your taxes are paid by that amount of drawdown that you have in the S&P 500 or any stock for that matter. If you take a look at some of the companies that have appreciated to a great extent, those stocks don't stay up there forever. They are going to come down. And I would prefer to take the profit and then wait for the opportunity to invest when they are down. Again, instead of putting the math in the Excel spreadsheet, if you go take a look at some of the stocks that you might be interested and see how you could have made much higher, including the taxes that you have paid. And taxes is something that you don't have profit in all your stocks all the time. You can make adjustments to your taxes based upon adjusting sell some of the stocks that have lost, and you can get out of those stocks when you expect that they continue to go down. So that's my 2 cents worth in here.
Yeah. I mean, what you're saying is right, but I'm looking at a person who is like buy and hold and not a market timer, doesn't even know what's happening in the market.
No,
So
I
it's
agree with that.
yeah, it's
I
only
mean,
for those, right?
yeah, when you have a profit, if you take profit, there's nothing wrong with that. And if I have to pay taxes, I'll be glad to pay.
No, my idea is that I took a profit and got back right into SPY again, right? Because I don't know what the market is. I'm a passive investor and all I do is SPY. But what you are saying is you're picking the right stocks. I mean, I did tax loss harvesting way more in 2022 to capitalize on the gains of some of that other stuff, right? But we are a different animals. I'm talking about uh, people who don't follow the market and just invest in SPY, but feel like, okay, oh my God, this maybe the market is gonna go down and I'm gonna take my money out and I'll get back in when the market is down. Doesn't happen most of the time for most of the people, right? And you also know, I also know that market timing is very, very, very tough. Even the seasoned
Definitely.
investors can't do it. So this 10% is the average I took because is like SPY return from 8 to 12 on an average over a long period of time. So that's just as an example of it. Some cases SPY goes down 18%. In 2022, it was down 18%. Perfect opportunity to do a tax loss harvesting. Last year, it was like up 26%. Okay. But yeah, so that's the reason. I think it's
Again, when you have S&P 500, which is supposed to make only 10%, and when you have 26%, I feel that you should sell some part of it or majority of it and wait for the opportunity when it goes down.
yeah.
The averages, if the average is 10%, the S&P 500 is going to go down to an average at some point or the other. So you need to wait until that thing happens. When it goes down, that's the time to buy it again.
Yeah, I like what you said. Most of the people in my circle don't even know what S&P did. All they say, oh, you made money, why don't you sell? Because it's gonna go down. Without knowing what the S&P did this year or last year. So we live in a different world. Anyway, so I think that was my example. It was like, just don't, for regular people, even I think I'm also pruning myself not to sell just because I want to capture the gains. I want to focus on business because I've seen time and again some of the bad decisions, the worst decisions are the one where I actually sold too early and could never get back into the stock because I thought, maybe it'll go down and I want to capture the gains and take profits. And I was wrong. Anyway, I think this is probably we can debate it, but my perspective was purely from someone who is new in the market and just picking SPY because hey, you're not active in the market. You shouldn't be doing, picking individual stocks if you really can't follow those individual stocks. I see a question, are you sure we get a 20% appreciation? So if you really look at a Bitcoin, I think it has resulted more than 20% over whatever is 10, now it's 15 years of existence. So again, the idea is SPY over long-term average, which will be like 3 lifetimes. So I can't really say whether in 10 years on an average it's 10%. If you look at SPY since 2002 or 3, and last 16 years, maybe in last decade, it has returned on an average like 16%, which is 60% more than its long-term average. So is Bitcoin going to return 15%? I don't know. But I'm saying Bitcoin, yeah, it is more volatile and it has performed better than SPY so far. But the whole idea of this Excel sheet was not to tell that the Bitcoin is going to perform 15%, but to look at the impact of the fee that it would have, the impact that the fee would have if your asset is giving 15, it's like higher the asset grows, much bigger the impact is. So that was the case. Okay, let's move on.
Yeah, 1 second. The Bitcoin, since 2018, the futures market opened, and since then, the Bitcoin return is 261.41% from 2018 till now.
Okay, to 2018, yeah. I think Bitcoin, all gains are like front loaded. Lot
So-
of big gains were already had when it was like under penny, and then it moved.
It is at a new high, and I am not interested in getting involved with Bitcoin.
Yeah, I mean, perfectly fine. It's a different asset class, different volatility profile, and mostly driven by narrative so far. So you can do your DCF on Bitcoin. Let me put it that way. So okay, can you share the link for Excel? I think this is shareable. Yeah, this is the one where you can share. I don't have much. I think okay, I was trying to put something else. Yeah, I'll share it. Let me see. Is it? It's only private only to me. All right. Okay, another chart, which is, and this came from, I was watching Strategas, which is a investment research firm, very well respected on Wall Street. These are the list of the stocks, and I found that interesting, and I think something to that keep on our radar is these are the list of the stocks, and I think not updated in last, let's say 15 days. But this is the list of the stocks of Russell 1000 companies that could be like included in S&P 500. Right? It means they become big enough, their cash flow profile is good, probably haven't met 4 quarters of net income, but getting closer to it, etc. So I think Stratega's investment research firm calls it as a bench strength, right? You have your main players which are already playing in the court. Right? You got your Max 7 and all that stuff. But then you have your bench strength, which is these guys could be moving into code at anytime soon and will be invited to play. And if you want to bet on those, or if you want to take a stake on, in those players, these are some of the players. Okay. Which is like Apollo Global Management, KKR, CrowdStrike. We have heard many times that could be included in S&P 500. Super Micro actually got included, so it's no longer relevant for Super Micro. Palantir if you hang around a crypto, not a crypto, or on a FinTwit for long, you will see a lot of Palantir bulls talking about Palantir getting included in S&P 500, DoorDash, Atlassian, Block, Datadog, Trade Desk, Viva Systems, Cheniere Energy. So it will be good to keep an eye on some companies that are not in S&P, but big enough and have a profile to be included in S&P 500. So I thought I'll bring this up as your bench strength, something to keep an eye. I have no idea when any of these will get included, but doesn't harm if you have a list available for a watch list for different reasons. So this is betting on the next winner horse. All right, so I think Google we already talked about. I didn't realize that I actually had this content. I could have brought that up, but yeah, a lot of investors are asking for Sundar Pichai's head. Another chart, is the US market concentrated, right? In terms of how much of the share of top 5 companies throughout the history. So things that we hear right now is, oh, our indexes are top heavy. Few companies are driving the markets, like 26, 27% of our S&P is driven by like top 7, magnificent 7, whatever name you want to give. But looks like this is not a phenomena just now. It was a case even earlier also. Going back to 69, IBM, AT&T, General Motors, Eastman, Kodak, Exxon, more than 25%. Nifty 50, again 25%. And now we are back to similar 25% in Feb 2024. And so not the first time, but it's not a rare phenomenon. It has happened earlier also. Probably we know what happened after Nifty 50, right? These stocks were considered to be one-way stocks. Like you can never go wrong by buying these. But then, many of them never recovered. For many of them were so overpriced that years of their gains were already priced into their stock prices. But all I want to say is the phenomena is not new. Every time we have seen in history many times wherein the concentration has been this high or even higher than what it is today. There's another chart talks about US market concentration, which is now nearly 40-year high, like last happened in 1973. Of course, it was much bigger even prior to that. It's kind of similar chart, but this was surprising for me. Top 10 holdings. I thought US was like concentrated, but if you look at some of the other markets, they're even more concentrated. UK, like 50% of market top cap of UK driven by like 10 companies. Italy is like 66%. So the concentration seems to be, it's not a US specific phenomenon. The bigger companies get bigger even in the other stock markets also. Johnson said GE once drove the market collapse in mid 2000s. Yeah, GE was the like darling. GE, when it comes to managing or the management principles, how to run a company, GE used to be the beacon for how to, for leadership, for management, for running companies, for meeting targets. And Jack Welch was revered as the best CEO, not just in US, across the world, right? There's an interesting story. Maybe we'll have time. I'll talk about it. How I was, when G was in its peak, I was in India and like we used to be fascinated by Jack Welch and his books. I remember buying a couple of books written by Jack Welch, and I read through those, and those, like, G was one of the most admired companies, I would say, in the world. I wasn't even in US then, but I didn't know anything about, let's say, other big companies of US, but we knew about G. All right. Yeah, but eventually we also figured out what Jack Welch was doing. So the heroes of, I would say, 1990 or 19, I think between 85 and 1990s, now kind of being villainized because whatever he did to meet market expectations wasn't always above board. And then leveraging using G capital and all that stuff. Anyway, yeah, the big companies changed. Let's talk about investing strategy for higher rates world. Today, after many, many years, we are actually having, maybe after 40 years, we are having, some decent yields in bonds, in treasuries. So what are some of the opportunities available in case of a high rate world, right? One is, of course, treasuries, as risk-free as you can get. If you are completely want to be risk averse, right? Or if you have money that you need in 1 year, you can't afford to lose it because you have a specific target that you need that money, you need it in January next year or by end of January next year. There is a treasuries available at 5.03%. Not great, but at like 5% you're gonna make for, it's basically, this is APY. So you're not gonna make 5% because you're already in March. So you have only 10 months, but at a 5% APY, you can just put your money in treasuries and just sit tight. Right? And yeah, basically you're gonna get all that back. You put in stock, you don't know whether you're gonna get that, whether you will have a return of capital or not. And in some use cases, the return of capital may be more important than return on capital. For that use case, yeah, treasury is, I would say, perfectly fine option, and it is yielding 5%. That's one. Other is dividend stocks, right? Utilities, financials haven't yet participated, right? But it could. Then you got a REITs, consumer staples. All these are like dividend stocks, right? So there are ETFs if you want to invest in dividend, like utilities, financials. You got XLU, XLF, XLY, XLP. Or you want a mix of everything, then you got a SCHD is one dividend ETF I use. There are others also like Novo. So these are the companies, these are the ETFs which have companies that have a history of not giving, but also increasing dividends. I think ACHD is with the companies which have high yield dividend yields. Noble is a dividend aristocrats, means companies that have increased their dividends for at least 25 years. So that is another option to pick up ETFs. Again, we are looking for this income, right? International ETF, EAFE, it yielding 3%. And it has got only two software companies in it, ASML and SAP. So if you're thinking, oh, tech is too hot, and I want to get some dividend exposure outside of a tech, EAFE is another option. So SPY dividend yield is around 1.5%, EAFE is almost 3%. John said, treasuries are tax advantage too. Yes, perfectly right. That's why I would prefer treasuries over CD. Even there are CDs which are yielding 5%, but I would prefer that I mean, I prefer treasury over CD, especially if you are in high tax state also, right? Because that's you don't have to pay state and local taxes on treasury income. Now, another is energy stock. Daily energy stock has a high dividend yield, close to greater than 4%. And also the stocks are on average, near 52-week low with a much cheaper price to earnings ratio. So you also have a capital appreciation play. But even if you ignore capital appreciation, still, I think dividend yield is also decent one. And this capital appreciation could be your cherry on the cake, right? Or icing on the cake. So you got an ETF called XLE, which is my preferred vehicle because I'm not an energy guy. So I don't spend time on looking at individual energy companies. I just buy XLE or trade XLE. I have a holdings in XLE, then I have options on XLE. Or the other one is energy pipelines. I would rather say XLE. The other one that I have is AMLP, which is again decent dividend yield. AMLP is like 7-8%, more than 8% dividend yield. Let's check it out. Why even guess? AMLP. Where's the dividend yield? Where did the dividend yield go? Yeah, 7.43%. At some point of a time, it was like 9%. So my two preferred vehicles are AMLP and XLE. Because I don't follow individual energy companies, so that's why I don't own individual energy companies. Then there are energy pipelines, which just gives 7 to 10%, but you have to deal with K1. I dealt with it, I think, 2-3 years ago, and I'm like, I'm not doing anything with the K1. So I don't want these energy pipelines, MLPs. These are called MLPs. Right? Financials, RBC Citigroup has got 4% dividend yield. Or again, I would pick any individual company if I'm watching those individual company means after end of a quarter, I go and look at the results, what's happening. Otherwise, I'll just take XLF, which is a ETF, financials ETF that yields 1.5%. Consumer staples, close to 3% yield. But then you run a risk of individual companies. REITs, Vanguard REIT ETF is yielding close to 4%. Or if you want a specific REITs, there are the beauty of US capital market is doesn't matter what you want to invest in, there is always a good investment vehicle available for it, right? You want to do malls and offices? Yeah, there is SPG, Simon Property Group. I played this with this ticker during COVID because it was beaten down. I don't know where it is trading right now. Then if you are bullish around the apartment REITs, right? Or there are warehouse REITs if you're bullish on the e-commerce stuff. So I guess looking at if you're looking for a, let's say, little higher income generation opportunities, there are a bunch right now available. Again, not a financial advice, but I thought I'll share because it looks like someone had asked, and sorry, I forgot who had asked me, but this was pending, so I thought I'll bring this up today. Invest in IRA account if you're worried about K1 reporting. But I mean, I have the reason, yeah, maybe I'll look into that. The reason I have an AMLP is it doesn't give K1. It gives, it is in my IRA account. But I think I did a commodity ETF, DBC, and I got hit by K1. I'm like, I'm not doing that anymore. I did these guys, one of, I think Blackstone. I was sent K1. I'm like, I'm not doing that anymore. I hate these K1s. These are tax headaches. And once I think I had actually called up my broker and I asked him, is there a way I can find out, which security is issuing K1 versus 1099? They say, no, you'll have to basically go and, hunt for it. There is no easy way to find that out. So now only thing now I have is I'll create my checklist once I get hit by one of them. Like, okay, I'm not doing that anymore. All right. Any questions? Or if you have found any other opportunities. I think there was not yesterday. Last week someone talked about these yield max ETFs, right? And because we're talking about only income and not really the capital appreciation part of it, yeah, yield max ETFs will be included because it was able to give you like 10% income. Though you could have done better by just holding the underlying, but that we're not talking about capital appreciation. But I don't know how long can these yield max continue to give this. I guess as long as the skew on the call side in options continues, you'll probably get some decent income. Once the skew disappears, that's a discussion for another day. All right, any questions? What are other things where you are able to find some good yields? Maybe I should add treasuries. I should also add you got treasuries, you got CDs, almost risk free. Any other vehicles that you've identified? Oh, okay. Let's move on. Probably I'll come back to this.
What about commodities, Vivek?
I'm not invested. Tell me. We can talk about it. I mean, commodities. I've looked at like DBC, but that gives you K1. What else? You like energy is a commodity.
Crude oil,
Looking at
gold,
give us a vehicle. GLD.
GLD,
How much GLD yields?
USO,
No, how much GLD yields? GLD. What's a GLD's yield? GLD doesn't even give a dividend.
I don't think so.
Yeah, so then I can't make use of yeah, so right now we're looking at where we can actually get some good yield. Yeah, so looks like doesn't give any dividend.
Well, if you go to like DBA gives you 4.28% yield,
DBA.
agricultural commodities.
Does it give you K1 or?
I'm not sure about that.
Because I had a DBC, but it looks like maybe they both are kind of a similar stuff. Oh, so DB is just agriculture. DBC was, I think, everything.
DBC says it is a ETF, so it should not have K1.
No, I got K1 on DBC. So, and I have a post it says K1 triggers. I have a DBC there. I have a BX there. So, and like I had a profit of what, like 10 or 20 bucks, and I had to pay 50 bucks to file that damn stuff. So I'm not doing K1s. Wanted to explore corporate bonds. Have you? No, I have not. I think there's an ETF. So if I were to do a corporate bonds instead of doing individual, maybe I'll do an ETF of high yield corporate bond. High yield corporate bond ETF. and I think BlackRock has something. But yeah, that could be another option would be, hold on, is there somewhere? Okay. One sec. Let me just bring this post-it. I think I wrote that long back ago called Credit Investment Opportunities. So treasuries we talked about. You got a bonds high yield BKLN. Oh, sorry, I'm just reading through this post-it, which I think I wrote it long ago. BKLN is high yield bonds. LN. I don't know what's the rating of this, but I think if I have it, probably it had a good rating. The other one is IBOX. So I think these are the opportunities which I was looking at, like credit-based opportunities, right? You're giving money to someone else. The other one could be your preferred shares, right? What Warren Buffett likes is, which is PFF. This is an ETF for preferred shares. Right? You and I, we can't get preferred shares from company. It's a Warren Buffett. He'll invest $5 billion and get a preferred shares yielding like 8%, 9%. That's his gig, right? That's what he does. But if you want to get a similar exposure, that's called PFF. And then there are actively managed bond funds. So the two we talked about, and let me just put it here, okay? Credit investment opportunities. Okay. All right. Treasuries we already discussed. Bonds, high yield bonds, like high yield bonds ETF, like BKLN, iBox. Is this useful? Typing it down, or if it's a waste of, feeling bored, waste of time, then I can move on. I thought maybe someone taking a notes, you can. Then preferred shares. It's a PFF. Then you got an actively managed bond fund. So the previous one was ETF. This is called SCIX, DFLEX. Okay, guys, do your own due diligence, because I think I looked at this maybe somewhere last year. And I just wanted to make sure I have it somewhere. So I just put it on this post-it note, and I just, stuck it on my board. But right now, I think Asi brought up, hey, corporate bonds. Then I realized I had a list somewhere of preferred stocks and all that. Okay. So that's another, like if you're giving as a credit opportunities.
I placed a ETF screener, which has dividend of more than 3%.
And has
and
1099?
taxation. Yeah, and no K1s in here.
Yeah, this is useful. Thank you.
You're welcome.
All right. What are things? You should expect more stock buybacks this year. We have already seen buybacks are clearly running, at much higher rate than in historical years. Reasons because earnings are growing and government is not favorable to M&A, right? Amazon can't buy a Roomba, like a vacuum cleaner company, and now JetBlue can't buy a Spirit. JetBlue and Spirit, right? I'm not confusing with something else. Or JetBlue Alaska. I think it was JetBlue and Spirit. And I think if you're a smaller company, you can't fight FTC, then forget about merger and acquisition. So you got money, what are you gonna do? Buy back the shares, or increase the dividend, right? So that's why we are seeing a lot of companies are buying back. Third reason, which I don't think it's being talked about, is recently court had rejected a rulemaking by SEC. right? So, so currently, like SEC required the company to disclose the share purchase on aggregated basis. Then they, created a rule saying you do it on a daily basis, which is okay, but also you would have to explain the rationale of why you repurchased it, right? And that would have, put a lot of company in hot water trying to explain the rationale behind it. But in December, the US Court of Appeals for Fifth Circuit, they vacated this rule saying, hey, hold on. This is not, we don't allow this because it has SEC's failed to do a proper analysis of cost and benefits and all that. So that also gave impetus to companies to, go ahead and continue to do the stock buybacks. Also, the fact that politics, the current administration is thinking maybe we want to increase the tax rate on share buyback to 4%. Currently, it is 1%. So before the 4% become effective, you would want to buy back as much stock as you would want to, right? So in 2022, they spent 923 billion to buy back their own shares. And now the buybacks have already reached all-time high. So that's the reason why you're seeing a lot more buybacks. And I think in the recent shareholder letter, again, yeah, forget what Grandpa Joe said last week in the re-election was stocks and taxes. Yeah, I mean, I think in the State of Union address, he did talk about raising the tax to 4% on buyback. And because I think it's buyback means we are enriching CEOs, but those who are, well, Warren Buffett say anyone who claims that repurchases harm shareholders or is beneficial to CEO is either an economic illiterate or silver-tongued demagogue. So it's a buyback is good way to return capital to shareholders, not just CEOs. So, but yeah, the politics get involved, right? So anything can happen when it's politics. So yeah, so we're seeing a lot of buybacks from the companies. And finally, a question to all of you. Have any one of you used the box spread option strategy? Anyone out here using box spread? Nope. Looks like no. So the reason why bring this up is, and I have to, okay, Shri says yes. So yeah, can you share examples of what's the advantage of doing this, Shri, and how as a retail investor that has benefited you? Number one, why would you do this? What's the motive? Number two is, how did it work out? If you can share your experience, please. Thank you.
To limit your losses, you can go ahead and box it out so that the most that you're going to lose is the one that you sold and the other side that you sold again. So you collect whatever you had collected originally is the amount that you keep.
All right, so
For
sorry,
example,
let's construct it. What is a box spread? Let's construct a box spread.
okay. You go to SPY or whatever that you want to choose.
Let's do SPX.
Okay. Now,
okay, I'm going out to April expiration.
Okay. Go ahead and create sell something that you want to sell, expecting that it is not going to go above that one or whatever your idea is.
Basically selling a call spread?
No, I mean, you're doing both the spreads, but if you have losses for example, if you go to 5150 call and you sold that 5150 call for $86.80, okay? Now you sold this and the market goes up against you, and now the share is around 51.75. And when it reaches 51.75, that's almost like it's your put side is going to have losses in that also. If you go to 51.75, it is going to be $83.10 for now. But if it has already gone up, you would be collecting only the, let me see, 51.50 is $80 right now. So this is going to be around $80 or so.
So how do I construct a box spread? So
Just if
I
you
thought box spread is like either you sell a call spread as well as a put spread, or you buy a call spread and a put spread.
Okay, if you go click on the 52 put
So
52,000, 5,200,
okay, buy or sell.
sell,
Okay, you're doing both sides sell. Okay,
right? So the spread is $50 and you're collecting 194.50.
right.
So if it stays in between these two, you have to pay them back the $50 and you keep the remaining amount for yourself.
So let's got this. So this is my box spread, and I got a credit of, sorry,
194.50,
yeah,
and the spread between the two is $50. So that's the intrinsic value of that spread. So the remaining amount, 194.50 minus 50, which is going to be 154.50, is yours to keep.
got it. So how does this graph looks a little weird, showing if it continues to rise. Yeah, so I sold, but I do have a if it continues to rise, I'm gonna lose money, right? Beyond this call.
Well, then you can consider if it goes up higher, 51.50 plus 194.50 is your loss.
Correct.
Above that point, you would have losses.
Yeah. Okay. So I think what I looked at was basically we actually create a box around it, and that's where I think the spread comes into picture. Okay. So the reason why I brought this up is, and I was today morning was trying to find that article which I read, and I couldn't find. I don't know which magazine was it, but as you guys know, I've been to park the cash, we've been buying treasuries, right? Or I have like bought some IC asset, which is again equivalent of a cash is a bond, but then you pay taxes on the gains for this. So there's a company started by an ex, I think, Marine or Navy SEAL guy. I forgot who that person was. He came back, did his PhD in finance, and he started his own firm. And after 8 years, they created a product which basically invests in treasuries, but they use the box option strategy plus use another individual stock to and use the ETF structure to make sure that there are no gains. So you actually don't end up paying any taxes, which I found very fascinating. And now that ETF has accumulated, over the past year, I think it's been all around only for a year, is more than $1 billion, which for a normal ETF, it's a very huge amount. That's what I was trying to understand. And, say now I think the Congress is becoming wiser, saying, gosh, there's a loophole in this whole ETF tax structure, which companies like these can actually make advantage of, and you can continue to accumulate gains. And they're using a box strategy to basically contain the risk and use. I'll try to find out where it was, but I really like that, and that's where I'm like, okay, I need to understand what exactly they're doing and what's the risk involved in that. So I just took a note. Okay, I need to talk about box option strategy. But did you? I was just trying to say, did you hear about that ETF? And I don't know where I read that, and probably I didn't do a good job in either taking a screenshot or keeping the link to that article, but I will spend some time this week to find that article, and maybe we'll talk about it next week, that how they're using box option strategy. And I think, and they take another option trade on an individual stock and just minimize the taxes. So basically, loss on one side and gain on other side, all wrapped together in way of ETF structure that you actually don't end up paying gain. Whereas your ETF instruments continues to go higher. It was fascinating to read it.
I think it is the BOXX ETF.
BOXX. Oh yes, I remember this chart. I think you nailed it. Yeah, so is that BOXX ETF? Oh yes, this was the Bloomberg. I think that maybe I read it. Yeah, Alpha Architect 1 to 3 month box ETF. Maybe I read it on Bloomberg.
This one is only 5.27% return over 1 year time period.
Yeah, which is fine because it invests in T-bills, right? So that's what I'm trying to figure out, because if you invest in treasuries, you have to pay federal tax and all that stuff. So I'm not looking at like stock versus T-bills, but this is more effective way to better tax effective way for getting a similar 1 to 3 month, whatever, the T-bill exposure. Yeah, I think probably I did it. Maybe then I did it on Bloomberg. Well, I'll see. I'll find out what. There was a good article around this. Prashant says, which tool are you analyzing? This is the TD Ameritrade. So if you have an account with TD Ameritrade now Schwab, you can download a platform called Think or Swim. And that's the Think or Swim has this analyze tab. This is a lifesaver for me, guys. So this week analyst tab was broken. So I called up TD Ameritrade. Then on Twitter, also I pinged them. And at least after 2 days, they responded saying it's going to be fixed, the next day morning. Yeah, because I need this to know what's my break evens are. And, you can play around how as time passes, how your profitability will change. If you're, different expiration day, there's a lot of stuff in this analyze tab. All right, what else? I think, oh yeah, we already hit our mark. So let's call it a day here and not start any new topic. Any other questions or anything else you want to talk about? I can hang around for 10, 15 minutes.
I guess if you invest in the box, you have to pay taxes at some point when you liquidate the funds.
Yeah, but then I can figure out when I need to do that. In treasuries, the moment when it expires, I get that and have to pay tax, and then I have to reinvest. I do the same stuff, but I already had a taxable event.
Wait, one last question. What was the airlines news? There was one airline that somebody was buying something.
Oh, JetBlue and Spirit, they wanted to buy it, right? And then the FTC kind of sued them, and JetBlue and Spirit, they decided not to do that.
Yeah, yeah. The same stock pumped 50% and dumped again.
Oh yeah, it's a merger. I was like, and with this administration, I think doing or buying based on the merger news is a challenge. Yeah, the merger called off. Yeah, JetBlue and Spirit merger called off. Whereas there is another Spirit, which is not Spirit Airlines, but Spirit Aerosystems.
Yeah, Boeing bought it.
Sorry?
Boeing is buying that.
Exactly. And you know the story of how the Spirit Aerosystems came into being? It was actually Boeing. They had kind of spun off into another company called Spirit Aerosystems. So it came out of Boeing, going back in Boeing now. And I'm sure the bankers who had given a justification of why it should be a separate company and not a part of Boeing, the same bankers will now come and give a justification of why Spirit should be part of Boeing and not separate company. But so So Boeing does the design, and the whole fuselage is constructed by Spirit Aerosystems. And I guess the logic for spinning off would have been, hey, this is capital intensive work. You can basically become little capital light or whatever, increase shareholder value by taking this business out from a balance sheet of Boeing. But then they start to have a lot of these challenges that we are seeing. Or another wheel fell off. Boeing. I'm a Boeing shareholder, so I'm not like frustrated with the things that are happening with Boeing. And I think the only reason I'm still holding is customers don't have any other option. It's oligopoly. That's the only reason why I'm still holding my Boeing shares. This is one another private company comes in, which opens the door a little bit bad for Boeing. And yeah, it looks like they have a structural problem with respect to their quality issues. Put the money in box is the article you read. I'll have to see what that article is. Put the money in. Was it in Barron's, Bloomberg, or? No, this was not a Matt Levine stuff. Yeah, but I think this is, no, this wasn't kept, but I'm gonna bookmark this. Okay.
You can try this other link.
No, not Seeking Alpha. Anyway, ignore it. I mean, I'll have to find that out, but that's where I read about this thing. Spirit being acquired back by BA. Yeah, merely to more spirits being liberated. All I know is that the tire was liberated from Boeing aircraft when it took off from San Francisco, and then had to do emergency landing in I think LA or somewhere. All right, what else?
Vivek,
Yeah, go
the
ahead.
boxing of options is been there for a long time. It's nothing new.
No, that I know. I think first time I looked at was in 2019. But that was purely from options perspective, right? And then I never used this because what I saw was if I and I remember that I actually tried to see how I can use it, but the amount of profit was very less, right? If you have a, let's say, $20 wide for a month, if I sold or bought a box, you're like making like a 10 cents or $10. So I really didn't think that unless you have a huge volume to use box strategy. Uh, and I never used it until I read this article and I'm like, oh yeah, I think there was something box strategy. I forgot about it. And how are these guys using it? I want to get back and see what kind of a risk may be there. That's where. But you're right. Yeah, the option strategy has been around, I think, for ages. Because at the end of the day, it's just a call and puts. But I was trying to find out if someone is actually using it as like a regular option strategy to generate income and how they're able to do it. Because what I found was that the amount of effort versus the gains didn't really justify for me. Yeah, there's the one. But the article was actually, that was also an interview of but now because I have a T-bill investments, right? So I'm like, maybe I should move the T-bill money into this. That's
Well,
why I started exploring it.
I'm not sure that is a great idea. If you have T-bill, you can utilize it as a collateral for your stock or options trading. But here it is an ETF and you cannot utilize it against the margin or whatever that you want to utilize it for. T-bill is considered as equivalent to cash, but this is not equivalent to cash. And the amount of returns is not that great. And why would you want to just hang your money in here? And this is like a CD. Essentially, it is like a CD.
So here's my situation, right? Again, other people will have different one. My T-bills are on Treasury Direct. So the whole margin stuff is not even, doesn't even matter for me because I'm not
Okay.
getting any margins anyway. If I bring it into my, again, this brokerage account, I mean, there is pros and cons of this. The reason I did it on Treasury Direct is so that it's separate, right? Compartmentalized. So I'll have to now get over that whole compartmentalization logic and bring it here. But the benefit I'll get is it'll start to give me more buying power. Plus, of course, the taxable the tax benefit. But anyway, it's a when I read that, I found it not just the box, but they also use another ETF to offset the gains coming from the. They use another stock to offset the gains coming from the box, and the combo is what makes this tax tax favorable. All right, I guess that's it for. Oh, we have 3 minutes. What else for next 3 minutes? There's a question. Are you still invested in cryptos? Yeah. I mean, so here's like sometimes you have a split personality, right? I sometimes feel I do have one when it comes to investment. When it comes to crypto, I'm like chilled out. Doesn't really matter. It goes 10% up, 10% down, 15% up or down. I'm not gonna touch that. Right? But having a similar behavior on the stock side is a little difficult. I do feel a little bit of a my heartbeat will change when the things have to start. But in cryptos, yeah, been there, seen that. It doesn't matter, 15%, 20%. That's how the life is. But yes, I am still invested. It's a long-term game. So for me, I think I'm not gonna probably sell until it hits, let's say, 85K or something, decide to take any sell decisions.
Vivek, one last question. Which one you believe in, Oracle or Adobe? Like, which one do you think is a more kind of like future-oriented company?
Tough question because I haven't analyzed either of these companies.
I
But
see.
looking at, again, without even analyzing these companies,
Which one has better future?
I mean, if Oracle can pull in their OCI stuff, of course they have future, but I don't know if they can or not. Whereas Adobe has got, and Oracle is also using, will spin up their AI cloud and all that stuff, right? But I think both operate in a different segments. But I would, looking at over the last few years and maybe just getting some feelers from the market. And again, don't take it as a gospel of truth because I haven't looked at the companies and their profit profile, etc. To me, it feels like Adobe is doing much better job, has done better job recently in terms of increasing shareholder value.
Sounds good. Thank you.
But I don't know.
Yeah.
I haven't looked at either of these companies, but maybe Oracle, we will do it next week.
So you don't do earnings before earnings, like you don't do analyze earnings stock before earnings. Is it possible?
Not really, because during my initial investing days, I try to do this earning plays. Some worked out, some won't work out. At the end of the day, I did it for 2 years. Then I tallied my results, where I made money, where I lost money. Actually, very close to break even. So I'm like, dude, what the heck? I spent time in doing it, and I didn't make much money. It's like break even. I stopped doing earning trades.
I see.
So I'm like long run. I mean, I did it for 2 years, but then wasn't really beneficial. You make money in some, you lose money in some. Overall, it was like net not much of a gain versus the amount of a time that you spend. So I didn't do it. Now, if I like a stock, whether it's earning or not, I will start to build position and then keep an eye that earning is coming up. Then I know that the stock gonna be volatile during that time, and then see what I need to do for that stock. But just because earning is coming, I want to take a position. No, I don't do that.
So now we have Palo Alto Networks and Snowflake and Boeing. They all are like very sitting at the earning dips. Is it a good time to enter, or is it still high PS?
Did you love Palo Alto Network? Do you
Yeah,
like its business?
yeah. It's a 20% year-to-year growth revenue.
Yeah, then I think then you could, right? So my concern with Palo Alto is they're not natively cloud. So they bought a lot of companies to become cloud cybersecurity provider. And it's like trying to stitch together a platform rather than building a platform from scratch. And that is what we heard Nikesh, the CEO of Palo Alto, saying we are moving toward platformization, and now they're seeing some resistance from customers. Whereas if I look at the other company, CrowdStrike, which I do hold, they were natively cloud, built for cloud. They build their platform, build their product as a platform, right? So I'm like, why not? I'll pick CrowdStrike. But if you are involved in Palo Alto, you like Palo Alto, then if a stock falls on 25%, yeah, we should buy more. But I'm not convinced on Palo Alto. So I didn't pick Palo Alto. Snowflake, I mean, Frank Slootman is leaving. And hold on, now let me just pick up my Snowflake. I looked at Snowflake and then I also looked at its value line report. And I think I looked at its Snowflake. So let's look at.
So last you said I think you entered into Tesla, and is there any position you entered last week other than
I
Tesla?
bought a little bit Tesla. And then I also added, yeah, okay. So hold on, let me just finish Snowflake. What did I put on notes of Snowflake? Guidance, oh, sorry, bad handwriting. Okay, so I'll read through. Guidance for next week was bad. The revenue growth was slowing down to mid-20s. Frank Slootman, the CEO, is moving out. New CEO has AI focus, but no sales experience. So I'm gonna just watch.
I see.
Because 20% growth, why would I give you for a 20% growth, why would I give you valuation of price to sales of I think 40 or something?
Yeah, yeah, I think it's 50.
Right? Why would I give if you're growing only 20%? And now I've got a new CEO who has no sales experience. And where all the companies are making use of data and talking about AI, you don't have an AI strategy. Yeah, it's 20 is price to sales. I find that expensive. If they change the business model and maybe do better in terms of growth, maybe I'll pick up. I mean, there will be opportunities. So I don't want to get into FOMO of, hey, it was whenever it
Last
was like
last two
450 or
questions.
something. Now
For
162.
Snap and Rivian, last two questions. The Snow is like overvalued. It's still 145 is the right price.
So
Uh,
which one?
Snap and Rivian, those are two breakout stocks last week.
Yeah, Snap broke out because TikTok,
Yeah,
right? Snap is, I think, a good company, horrible management. And I saying this as a shareholder. I of Snap. So, but yeah, I've been reducing my cost basis, and I think I did Snap I read about Snap yesterday, and I think I put down my thoughts. Hold on, Snap. It's how bringing the companies that I like recently. Okay, yeah. Yesterday evening, I was reading about Snap, and I think I added my thoughts on where's my Snap. Okay, so I just updated the this page. Yeah, revenue was. Yeah, I updated this my document for Snap was what I did. Revenue was missed, lower guidance, only 10% user growth, right? Like Reddit is talking about what 5%, 15%, declining ARPU. They talked about their My AI for past 2 quarters. This quarter, there's no reference. So I don't know what happened to their AI stuff. Operating margin still negative, just like Reddit. FCF was free cash flow was highest, which is what they come and boast about it, but entirely sponsored by SBC, stock-based compensation. Meta growing at 25%. Amazon grew their ad business by 27%. And this one can't even grow at, what did it grow their revenue at? 5%, right? What's my conclusion? Don't add more to the position, keep selling covered calls, get assigned, sell a put. So I have a set position in mind, and that's what I've been doing. I'm just rotating around that, not adding any more. May benefit from TikTok ban or from some acquisition. So which is what we saw, because TikTok ban news came in. I was like, how come Snap jumped like 7, 6, 8% in my portfolio? And then I saw there is a news around banning TikTok. And it's a good company for a PE firm because a good product, bad management. So this is what my conclusion was.
That sounds good. Maybe somebody will buy it. This
That's something. Yeah, it could be an acquisition. I mean, I generally don't buy a company thinking someone else will buy it, but if I already have a company which I'm holding, and I've been having Snap for for quite some years, and I've been reducing my cost basis. And okay, I'll just keep it. I know
one
that's
last
not a perfect logical way to look at it,
one
but
last question for like Rivian, they came up with the news for like R2 or R3 2026. Do you still believe in the Rivian? Like, is their
so
product?
so I think I said earlier also, I'll still stand. I still hold opinions in US based EV. Other than Tesla, if I'm interested in any pure play EV company, it was Rivian.
I see.
I'm not interested in Lucid. I'm not interested in Fisker. I'm not interested in Nikola. But have I bought Rivian yet? No, I have not yet looked at Rivian as a business, because right now I'm just building my position in Tesla, right? So if I were to look at it, buy another US based EV company, probably I look at Rivian. But when I would want to pick that, that's something which I have to think. Right? So now I'm looking at my Snap position, and yeah, my average buy price is like $15.60, and current cost basis is $13.50. Right. So what? Yeah, it took me 4 or 5 years to sell premium on this, and yeah, I'll just buy it and just reduce the cost base, and hoping someday someone will buy the company, or maybe the investors will fire the management and bring someone else. Yeah, but this is not a happy shareholder for this. Cool. All right. Did I miss anything? On chat,
Hey
Melly.
Vivek, quick question. You said
Yeah.
you are building your portfolio on Tesla, or you said, you know,
No, position a little bit adding.
position in Tesla,
Yeah.
correct? So what's your strategy and what's your outlook for the Tesla in the future?
No, so I mean Tesla. I've been watching Tesla for years. But I
Right.
never bought a shares long stock position in it, because I found it to be too expensive. My target was if it goes below 200 is when I'll, 220 is 200 is when I'll start to add onto my portfolio and then basically sell options against my position to reduce the cost basis. Tesla is still one of the very active, very liquid stock for options and with a decent premium, right? So I'm not, when I say I'm building my position, I'm not going to put 10% of my portfolio. Maximum that I'm going to do is maybe 2% and then start to reduce the cost basis. Today, right now, Tesla is being challenged. And that's why, it is showing up in its results because they have to cut down the cost. But even now, when you look at it, it is the best margin auto company. Now, there is a lot of a pessimism around the whole EV demand itself. That's why we're seeing GM, Ford, or even Toyota's, Mercedes, or BMW, they are all rolling back on their EV plans because looks like the demand on EV is not what we thought it would have been, right? And that's why the stock is getting punished. But looking at where the stock is right now, I think I feel comfortable to say maybe this is a time where I can, the risk and reward in a long term may be in my favor, and let's start to build a position in it. It could go further down, if the numbers don't come up. It could go further down. That's fine. It's like a small portion of my portfolio. Hybrid the solution. Exactly. I mean, I won't buy EV for a long time. I mean, like last week I showed, right? I put some cash to use, we bought hybrid because the whole infrastructure is still a big problem. It's good. EV is good for city driving. I won't buy it for long routes. We know about Melly if one like wild right. Yeah, so Melly, okay, so there is a Baron has an article on Melly. Okay, good. I'll read that.
Excuse me. People don't like Americans like to take trips, and they don't want to look for their for the stations for EVs. Did you
Sorry, I
understand
mean,
what I said? People like to take trips, road trips, and they don't want to look for it, for the
yeah, I
places to
mean,
get Phillips.
exactly. I mean, we don't have many of them, and I don't want to wait for like an hour to just charge my car. And Neo in China has done those battery swappable battery where you can be in and out in 10 minutes. Yeah, that works, but we don't have that in US. So that's what I'm still
But
holding
then
in my
with
portfolio.
their supercharging option, I think what I heard is like it's like 15 minutes, 5 minutes more than 10 minutes.
No, the idea is to charge the car, it will be 15 minutes. But at
Uh-huh.
least some of my friends who have these Teslas, they have to wait for like 30 minutes to get to to start making use of the charger because there's a queue. And maybe it's a West Coast thing, I don't know. So anyway, okay, so it's 12:45. Good fun, I think. Good questions, and yeah, thank you for coming here every week and enriching me with your thoughts and with your questions. So I'm gonna look at Oracle, and we'll talk about Oracle next week. Any other company? Okay. All right. What was the company added to S&P 500? There was SMCI. The other one was that Hoka we talked about last week, right? Which one? Dockers Outdoor, the owner of Hoka shoes. So these two were added to S&P last week. All right.
Question.
Let's.
I bought VIR. I think that's the first stock I bought. Actually, good thing I don't have that much. But it's in San Francisco. It was the first It was one of the first companies to have coronavirus. I don't think it was a cure, but well, anyways, it's gone down like 5 times. It's a biotech. I don't want you to waste your time on it, but it's well funded for. They have enough money for like 3 years. But would I buy more? I just count it as loss. I think I only bought like oh man, I spent like 7,000 on it. But it's only 150 shares. Should I take a chance and just or biotech has it's not profitable?
Biotech is very volatile, and unless you know what's the pipeline is, where are they in their trials, I don't get into biotech. Individual companies, unless I have done some real in-depth study in terms of what products they have and what's happening there, because it's going to be very volatile. I mean, the majority of the I'm just going out on a limb by saying this. Majority of the stocks like movers, if you look in, are generally I see from biotech. So let's see, top gainers, AIMD. This is medical devices, electronic components, biomedical. Uh, this is shell company, auto, biotech, another biotech, VANC. We have a major losers, AMLX, pharma, biotech, IT, medical. Yeah, so biotech. So they are generally very volatile. If you really want to play biotech, go via ETF. All right. I'm getting called, so I guess that's it. All right. Thanks, everyone.